One man's financial wizardry turned high-risk junk into Wall Street gold, creating billionaires overnight and ultimately landing him behind bars. Meet Michael Milken, the junk bond king whose bold bets changed the life of billionaire investor Carl Icahn forever. In the dazzling yet controversial world of Wall Street, few names carry as much intrigue and debate as Michael Milken, famously known as the junk bond king. Born on July 4, 1946 in Encino, California, Milken was destined for an extraordinary life in finance. Before he became a titan of finance, Milken's fascination with credit markets began while studying at the Wharton School of the University of Pennsylvania. His thesis, focused on the potential mispricing of high-yield, low-rated debt, laid the theoretical foundation for his later empire. Contrary to mainstream belief at the time, Milken argued that so-called junk bonds were not necessarily doomed to default. Instead, he posited that the risk was overstated, and with the right diversification, the yields offered substantial upside. This contrarian theory, at odds with prevailing financial orthodoxy, would soon transform into one of the most disruptive investment innovations of the 20th century. From his early days at Drexel Burnham Lambert, beginning in 1969, he quickly reshaped Wall Street through the innovative yet risky use of high-yield bonds, infamously branded as junk bonds. Milken's unique insight wasn't merely academic, it was aggressively applied in practice. He didn't just sell high-yield bonds, he engineered an entirely new financial ecosystem. Drexel Burnham Lambert, under his leadership, became the central hub for speculative capital. He would often underwrite debt for companies with weak credit profiles, take large proprietary positions in those same bonds, and then orchestrate their resale to eager institutional buyers. This gave him enormous influence over who received capital and on what terms, effectively allowing Milken to play both banker and kingmaker. Initially overlooked, junk bonds were considered too risky for traditional investors, but Milken saw an opportunity. By aggregating these bonds and selling them with higher yields, he opened doors for smaller, less established companies that couldn't obtain financing through traditional means. Throughout the late 1970s and into the mid-1980s, Milken's aggressive strategy turned Drexel into a powerhouse. At its peak in the mid-80s, Drexel controlled nearly 50% of the junk bond market, making Milken extraordinarily wealthy and influential. Notably, Milken's strategies fueled the rise of corporate raiders throughout the 1980s. Figures like T. Boone Pickens, Ronald Perlman, and Nelson Peltz relied on junk bond financing to mount hostile takeovers of larger, underperforming companies. These deals were often ruthless and controversial, leading to mass layoffs, asset stripping, and executive oustings. While critics decried them as destabilizing, proponents argued they promoted shareholder value and exposed bloated corporate inefficiencies. Milken was central to this aggressive restructuring of corporate America, supplying the financial firepower for these bold moves. One prominent figure who owes much of his early success to Milken is financier and investor Carl Icahn. Icahn, now legendary for his activism in corporate governance, made one of his most notable moves in 1985 when he pursued Trans World Airlines. Icahn's takeover bid, initially struggling for financing, was dramatically boosted by Milken's high-yield bonds, allowing Icahn to secure the necessary funds. Their collaboration wasn't merely transactional. Icahn often recounted the decisive call he had with Milken late one evening, where Milken assured him the bonds would find buyers. Icahn later described Milken as brilliant, tireless, and possessing a vision others simply lacked. Perhaps most compelling about Milken's story is the tale of his lasting relationship with Ted Turner, founder of CNN. Turner had grown his cable empire significantly in the early 1980s, often with Milken's financial innovations providing crucial support. Yet, as Turner recounts in interviews, it was not merely money that bonded them, it was Milken's vision. Turner often mentioned how Milken once advised him during a tough financial period in 1985, stating plainly yet reassuringly, "Ted, people think you're crazy now, but soon they'll see you're a genius." The anecdote symbolizes how Milken not only transformed companies but profoundly impacted the individuals behind them. The ripple effects of his approach reached Washington. By the late 1980s, Milken had not only reshaped finance but also politics. His immense wealth translated into substantial political donations and lobbying power. Members of Congress and regulatory bodies began raising red flags about the growing influence of junk bonds and the potential fragility they posed to the financial system. Even Treasury Secretary Nicholas Brady criticized the high-yield market as being overly speculative and prone to systemic risk. As scrutiny mounted, Milken became the face of excess and deregulation, a symbol of Wall Street's greed-driven culture. But this soaring success wasn't without turbulence. As Milken's influence expanded, so too did scrutiny from regulators. In 1986, the insider trading scandals surrounding Ivan Boesky cast a long shadow over Drexel, implicating Milken indirectly. The SEC began an extensive investigation, and by 1989, charges against Milken himself were brought forth. Facing overwhelming pressure on April 24, 1990, Milken pleaded guilty to securities fraud charges, marking a stunning fall from grace. Milken's downfall was not simply a result of poor judgment, but also a reflection of a broader era of financial deregulation and explosive ambition. His aggressive tactics drew criticism not only from regulators but also from rivals on Wall Street who viewed his methods as dangerously destabilizing. The Justice Department accused Milken of engaging in a pattern of racketeering where junk bonds were used as leverage to manipulate entire companies. The eventual collapse of Drexel Burnham Lambert in 1990 sent shockwaves through the financial industry and led to thousands losing their jobs. Yet, in a twist befitting a figure of Milken's complexity, his time in prison marked the beginning of a radical reinvention. He emerged as a prominent philanthropist, channeling his wealth into cancer research after his own prostate cancer diagnosis. He founded the Milken Institute, a non-profit think tank focused on public health, education, and economic policy. His efforts have since led to billions in funding for medical research, making him one of the most influential figures in modern philanthropy. Milken's trial and conviction did not mark the end of junk bonds, but it did prompt a reckoning. The SEC and Congress tightened disclosure requirements and investor appetite temporarily cooled. Yet, the model Milken built never truly died. It evolved. The rise of private equity in the 1990s and early 2000s drew heavily on the very debt structures Milken pioneered. Firms like KKR, Blackstone, and Apollo would go on to use leveraged financing on a scale even Drexel never imagined. Ironically, decades after his fall from grace, Milken quietly received a presidential pardon in 2020. The decision was controversial, with critics pointing to his past crimes and defenders highlighting his philanthropic legacy. The pardon symbolized the complexity of Milken's legacy, part villain, part visionary, whose shadow still looms large over Wall Street. We are a growing channel and appreciate your support. Remember to like, comment, subscribe, and share this video so we can keep making more content and continue to improve our quality. We at the Capital Curiosity team thank you for your support and can't wait to bring you even better content in the future.